Hello there. Welcome to another episode of the Money and Markets podcast with me, Kuzi Sharara. So the Money and Markets podcast is divided into two segments. We talk about all things investments and we also talk about all things financial literacy to make sure that those educated Zimbabweans are also financially literate. So in today's podcast, we are talking about a concept, a complex concept to some, but also very simple, and that is the concept of diversification. What is it? What is diversification? How can it help you in terms of your personal finance? So you have probably heard the saying, don't put all your eggs in one basket. That's the core idea behind diversification. In finance, it means spreading your investments across different asset classes to reduce risk. That's it. You just want to diversify so that you can reduce risk. Imagine this. You invest all your money in one single company on the Zimbabwe Stock Exchange. If that company does well, you could see significant returns. But if the company faces unexpected problems like product recall or a change in market demand, you could lose a substantial portion or even all your investment if the company, for example, is delisted from the stock market and it goes under liquidation. Now, let's say you diversify. Instead of investing in just one company, you invest in a mix of companies from different industries. So you invest in technology, you invest in mining, you invest in energy, you invest in manufacturing. You also include other asset classes like bonds, which are generally less volatile than stocks, and perhaps even some real estate investment trusts or commodities like gold. By spreading your investments, you are not as vulnerable to the performance of a single asset. If one investment performs poorly, like platinum, others may perform well, like gold, offsetting the losses. This doesn't guarantee profits, but it significantly reduces the overall risk to your portfolio. So think of it like a sports team. A team with only forwards, a striker, might score a lot of goals, but they might be vulnerable on the defense side. But a well-rounded team with strong forwards, defenders, and a reliable goalkeeper has a much better chance of winning. So that's all it is about diversification. With diversification, diversification can take many forms. You can diversify across asset classes. For example, stocks, bonds, real estate, commodities. These are different asset classes. Or diversify in industries. You invest in technology, healthcare, telecoms, finance, mining. Or in geographical regions where you invest locally, regionally, and internationally. Or you invest in different company sizes, large caps, medium caps, and small caps. You don't need to be a ZSC expert to diversify. Many investment options like mutual funds, exchange-traded funds, real estate investment trusts are already diversified, offering a mix of assets within a single investment. So diversification is a fundamental principle of investing that helps manage risk and build a more stable portfolio over the long term. It's not about getting rich quick, it's about building wealth steadily and responsibly. So that's it for today's On the Money and Markets podcast with me, Kuzi Sharara. Don't forget to subscribe to the channel and also to hit that notification button so that whenever we post some of our podcasts, you'll be notified and you'll be able to remain informed. That's the Money and Markets podcast. Stay informed and get the bag.